Welcome to This Week in Money. I'm Jim Goddard. Today, Chartwork CEO Ross Clark runs down the volatile markets over the past week. The editor of CyclesNewsAndViews.com, Tim Cyclesman Wood, talks about whether the Fed truly has the back of investors on the U.S. stock markets. Market historian Bob Hoye from Institutional Advisors gives us some perspective on what's been happening on the markets lately, including threats from Trump to start a trade war. And Inc. Research CEO Ted Dixon on whether there was anything good in the BC and federal budgets. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Aben Resources CEO Jim Pettit. We'll talk to Ross Clark right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's the CEO of Chartworks. Welcome back to the show, Ross.
Always good to be with you, Jim.
Donald Trump declaring that there should be large tariffs on steel and aluminum. We don't know if they'll go through, but Trump really wants them to. He's aiming this at China, but really Canada is the number one supplier of both aluminum and steel to the U.S. What's the impact of it going to be if those tariffs go into effect?
Oh, if they go into effect, I mean, all of the cross-border business that happens here with our two countries, I mean, this is just, it's unbelievable to think that they would be looking to do this. And, you know, I think I was reading 20 of the 30 Dow Industrial companies in the index, their CEOs and senior people have said right off the bat, this is the worst thing that could possibly happen. There's no way in the world that this benefits anybody. Trade wars as a whole are just a negative all around. And, if you're after China, who doesn't even rank in the top 10 as far as these are concerned, really, who are you after here? It's not the negative of what you're looking to do. It's you're trying to get some votes from the people that you promised in the steel states that you'd do something for them. But I mean, if it hadn't been for the promises during the election, why would you even seriously think about doing this at this point? And you would. It's an inflationary item for anybody who's looking to manufacture big items. Look at GM and Ford, Caterpillar, Deere, all these companies. The tail end of the week, I mean, they took it on the nose, and so if you got a few steel stocks which had a great day on Thursday and a mediocre day on Friday, so this is just something that you wonder what he's thinking. And who knows, by the time we get through this weekend, they may have backed off, because he's the greatest one at putting out one comment and turning it around and softening up before you know it.
Well, he suggested that teachers should get guns, and then in Georgia, a teacher had a gun and ended up holding up in a classroom and shooting holes out the window. Yeah,
and who's going to train them? And it's just ridiculous. So, with that, with the commentary, we have been seeing a strong U.S. dollar for the last week or so. Actually was up to its best levels in about 6 weeks. And then on Thursday, had a downside reversal as the news came out. And, it had technically been up to some good resistance level. It was around its 50-day moving average, so it was a spot to have some trouble. And I think if it can manage to push through the levels that we saw earlier in the midweek, that would be positive for the dollar. But overall, it's still in a downward trend, and I think there's some trouble there. And on the other side of the coin, the gold market, which we're looking at this big 8-year cycle that bottomed in December of 2016, the two ingredients that came into play this week, and we're looking for three to really become the bottom for the correction. The first was that you needed to take out a good support level that we had in the preceding few months, and in this case, that was the 1309 low that we had in February. And intraday on Thursday, they punched it down to 1303, and by Friday's close, back up over 1320. So that was good. You cleaned out some of the stops. The other thing is that the weekly chart has now gone into oversold condition, which of the 5 instances we look at here, going back to the 1970s, this is what we want to see going into a good low. The final one, we've got major support down around the 1355 to 1380 range. Could still see that tested, but we're now getting a long end point where the buy side of the precious metals is going to be looking probably very interesting within the next, I would say, 2 to 3 weeks here.
In Vancouver, we've seen gasoline prices spike, but they're not connected to the oil market. What do you expect in oil?
Well, the oil market had a really nice rally up until a week and a half ago, and we do these sequential counts, and when it was up over $64, that was retesting the 66 level that had been seen back in early February. We got an overbought reading. We've now settled back, I think, kissed pretty close to $60 during the week. Oil still got very, very high commitment of traders numbers, so there's vulnerability here. If oil starts to ease through, I would say, the $58 level on a closing basis, you're probably looking at something more into the low 50s. And optimally, that's what you'd expect to see as we go into this part of the seasonable in the year right now.
Ross, thank you so much for chatting with us.
Good to be with you, Jim.
Coming up next, Tim Cyclesman Wood on This Week in Money.
Always consult your investment professional before making any investment decision.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, thanks for having me.
Tim, where are we when it comes to the cycles in the Dow right now? We know that it's lasted longer than usual, but what does that tell us?
Well, Jim, we had the stretch cycle up into the January high, and then we finally got the swift little decline into a clustering of lows. There's some intermediate degree lows due in February. We saw that low on February the 9th. And now we're seeing either a retest of that low, or we maybe could see the intermediate degree advance already failing. It's too early to tell. I suspect that we may be just seeing a retest of the low, and if we do get a successful retest of that low, then I think we go higher still. I think that the bubble is probably not done. If it works out that way. But if we see an undercutting here of the February low, then I think things could be changing. So this is one of those technical intersections, junctures here, and depending on which way this turns, like I said, it could be a signal that something else is going on, and that February low is key.
Have you seen this before, and how has it affected the cycle?
Well, yes, we've seen it. I mean, it's just a structural, you're between, in Dow theory terms, let's talk about something for a minute. If you're between two important key points, as long as you're between those points, you're kind of in like limbo land. You don't know. You need to see either the previous low point hold and then move, that'll then set the stage to move higher, or if it fails, then that tells us that the cycle of the next higher degree has been broken, and that's a signal that something more is going on. And so right now we're between those 2 points, and yes, you see it all the time. I mean, it's just like I said, it's a cyclical. I've talked about cyclical junctures before, and that's kind of what I mean. I mean, you're at that. It's a decision time, for the market, and we have to see what the market does at this cyclical juncture, and then that is going to tell us what direction the cycle is going for the next, duration of that cycle. And in this case, we're talking an intermediate degree cycle of, 20 weeks or so, roughly.
We're told the Fed plans to hike interest rates 3, maybe 4 times this year. Does that make any difference to the stock market cycles?
It doesn't make any difference directly to the cycles, none whatsoever, because, one of the very basics of technical analysis is everything is baked into the chart. Everything is discounted into price. And that's true if you think about it. Any kind of news known to man is discounted into that stock price, by the players of that particular market, whichever the market may be. So, from a technical perspective, no, it does not make any difference. Because it's already been discounted into the market. But, what do I think about that? Personally, I don't think the market can stand it. I think that is part of the reason that we're seeing the setup that we're seeing. I mean, overall, regardless of whether, we see the successful retest of the February low or if it breaks, what we're dealing with here, let's not forget, is a bubble top. It's just a matter of, tweaking. Have we seen the top? Is it, what flavor is it gonna peak in? I sincerely believe that we're dealing with, a bubble top, no matter, what the ifs, ands, and buts are. It's the particulars of how it unfolds here, but it's a bubble top, and I don't think it can withstand the interest rate hikes.
What do you feel is going to happen with the price of crude?
I think all commodities are pretty much setting up to go lower. I know that's probably an unpopular belief. Crude oil, commodities in general, and even gold to a most extent held up better in the counter-trend rallies in 2017 than anticipated. We had some an intermediate degree low back in mid-July. I think it was in June in most of the commodity complex. And, that rally, I mean, it didn't set the world on fire, but prices held better than anticipated. But still, overall, I think that it's a counter-trend bounce, and that once everything gets in gear here, I think that all these asset classes go down together. And if you look at it, what turned back in at the January high? Pretty much everything turned together, everything bounced together, and now everything is turning down together again. And the downturns in, let's say, crude oil is not as obvious as far as the degree of the turns as maybe what we've seen in the market lately. But when you look at the cyclical relationship, they're they're close. In other words, the turn points, everything moved into turn points here in the last month, and it's all pretty much moving together, and it's hinting that I think that it's going to continue to move together. One of the big surprises I think we talked about recently was a low in the dollar, and I think that low is in place. I think that's the surprise, a low in the dollar and a process with equities topping and commodities moving lower as well.
Do you think the U.S. dollar is now going to start to rise in value?
I do. I think that I think that there's probably a retest of this low with the next intermediate term cycle, which is, down the road a little bit. But yes, overall, I think the dollar's pretty much bottomed with a major low. It should be a 4-year cycle low. And like I said, there may be a little bit of a retest with it coming up, but I think so, yes, overall.
Usually when the equity markets go down, gold goes up. You see a different cycle this time?
I do. I mean, I see, the 9-year cycle low in gold at this juncture, it still looks like that it lies ahead. Like I said, it's held up better than expected, but it hasn't gone anywhere either. And so it's kind of in that limbo land as well. But at this juncture, I still think that the 9-year cycle low in gold lies ahead, and it does look like, again, that all asset classes are setting up to go down together. That story hasn't changed.
Now, in the past, we've talked about in uncertain times, there's no embarrassment to go to cash and wait for things to settle out. Is that still your sentiment?
It is. Personally, I would want no part of this. I think the risk is just too high and too uncertain. With gold, I know that people have been, I saw a commercial yesterday. I was sitting in a doctor's office, there's a commercial about gold sitting there in the lobby. And, I realized the excitement about gold, but we need to get, people say, you always hear the phrase, let the market tell you. Well, the market does tell you if you understand the structure. And right now, there is the structure's a little bit muddied, but the statistics tell us that the 9-year cycle low is ahead. So what I'm saying with gold in particular is let's let the market tell us where that 9-year cycle low is, and then once we get that cyclical clarity, heck yeah, I'm all about it, because I think that if we do get to wash out into the 9-year cycle low, that is the place to be. But right now, until we get that clarity, I do think that the sidelines is a better place to be, and people don't realize, they just don't realize, with equities, the risk here. It's, if something, I've talked about this before, if something is abnormal long enough, then it becomes normal. And if you think about that statement, it's kind of profound, but, something's abnormal long enough, then it becomes the new norm. And everybody thinks that a Dow 25,000 and for, the bubble environment that we've been in for years, not just in the last year, but for years. I mean, who was it? One of the Fed, people were talking about, he was releasing the notes, he was talking about it being a bubble in 2012. Well, Trump talked about it being a bubble in 2015 or 16. I mean, yes, it's a bubble. It's been a bubble. This is nothing new. We saw some of the highest, technical readings, overbought readings since 1800 with the close last month. And then I've talked about the valuations and so forth. So yes, this is a very risky environment for equities. And like I said, it's in the process of topping, and I just don't know yet if we're seeing a retest of this February low, or if there's more of a decline before we get a more meaningful bounce here.
What do you say to people who declare it's different this time?
Well, in one respect, it has been different this time, and I'll tell you what the difference is. The difference is that, and this is not an excuse, but it is the truth. It is, the facts are what the facts are. And the fact is that it's different this time in that the Fed has had the markets back. They have pulled out every stop, done everything they could do. The liquidity campaign has been insane, and we all know that. That's not conspiracy. It's not, I mean, it is what it is. And so this has been a liquidity-driven bubble of biblical proportion, I would say. I mean, there's nothing like this in U.S. stock market history, and so, I mean, there's nothing to compare it to. So yes, in that respect, this time is different. But all bubbles end the same. And so from that perspective, it's not going to be different. It's going to be devastating. And like I said, it's a matter of the setup in getting there. It's never different, ultimately. It's always the same.
Quantitative easing caused this. Would they bring it back in again if they feel a major crash is underway?
I don't think they can. I think that what's those saying? I think they've shot all the ammunition. I don't think they have the power now. I think they put everything they can into it, and I think that when it goes, it's gone. I don't think there's much that can. I don't think. I mean, maybe they can. I mean, maybe they can, but I doubt it. I do not believe that when it goes, that they're going to be able to save it again.
Tim, any final advice for people?
No, that's pretty much it. Like I said, the risks are much higher here. I'm not saying, to try to clarify, I'm not saying that we have seen the top yet. It is possible. It is possible. And how the market behaves, and trying to clarify this, my stance here, how the market behaves with this intermediate term low that was made in February is going to tell us a lot. We have to see how it behaves. It's a test. It is a test at this technical juncture. And that's going to tell us a lot. And like I said, there may be another push-up, but if we break down here, then something else could be going on.
Tim, thank you so much for being on This Week in Money.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Coming up, market historian Bob Hoye, next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh shear zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to This Week in Money, Bob.
Yep, Jim, good to be with you.
Putting a little historical background to what's going on right now, we have U.S. President Donald Trump announcing he wants to put 25% tariffs on steel and 10% on aluminum. One of the problems is 52% of the aluminum the U.S. imports is from Canada, and 16% of the steel. We're number one in both. He might think he's attacking China. They're way down the list. President Trump also tweeted, "Trade wars are good and easy to win." Bob, taking a look back in history, are trade wars good, and are they easy to win?
Well, that's the formal side. Now, within any country or economy or anywhere, competition is really good. And competition is due to different people, and different areas have the ability to produce different products. So this is where trade is good. And Trump is being a bit rough on this one. You can see him being upset with the NAFTA agreement because Well, it was designed by bureaucrats, and they did not leave out the cheat whereby the Bank of Canada depreciates the currency, the Canadian dollar relative to the U.S. And that is just terrible, and that really is a big problem. And, of course, a real free trade deal is, hey, you declare free trade in every direction, but you also give the world a sound currency, and that works best, but that is not going to be created anytime in the next little while. So this is part of a bargaining thing. This kind of stuff, tariffs and things, is not good. And while it may be popular with certain segment of the economy, such as steel producers, it's not sound at all. And it may be part of a bargaining ploy on trying to set up a new NAFTA or a new trade agreement. But now there's another aspect to this, Jim, is that, and this is far too early. I mean, the U.S. employment figures are the best they've been in 25 or 30 or 40 years. But what happens is, after a great bubble is over, you get a serious credit contraction, and you also get a business contraction. And then that's when each different country then decides it's going to look after its own unemployment problems. And typically they have done that with putting in tariffs and trade barriers and stuff like that. And it's mechanical, and it's been part of every great post-bubble contraction in history. Well, the one I remember, and I was just looking it up this morning, I haven't got to that file yet, but after the 1825 bubble, and here's where I want to look it up, is either the U.S. or Great Britain came in with a bag of tariffs. It was called the Tariff of Abominations at the time, in real time. So, yeah, but this is way too early. I mean, you're still in a boom, so there's no need for protectionism. So with Trump, and then it's part of his bargaining thing to try and settle things with trade barriers in Canada, or I said trade agreements. So who knows what they're going to end up with. On the plus side, the tax reform that has been going on in the States and will continue to go on is really very good. This one is not, and I can't support Trump on this one, so we'll just see how much of it is bargaining ploy and how much is not. But, you know, Jim, the news media yesterday were that it was the discussion of trade barriers that drove the market down. But you can't really say that because, you know, if you're in a strong bull market, one of the features is that the stock market goes up in the face of bad news. So the stock market is getting ready to head down. You've had the support which we were looking for from last November, which would have been firming industrial commodity prices. Hey, we had some of that for a while. Crude had a nice rally up to, and the number is important, 66.6. Got overbought, and it's been correcting. Same with base metals and base metal mining stocks. Nice rallies, got overbought and now correcting. Lumber was the big one. That did very well, but it is now up and giving, let's call it excessive technical measures here, upside exhaustions. So that lumber boom is about to end. And this then will be where the firming industrial commodity prices were supportive of the senior stock indexes, they're no longer supportive. And then when lumber, the hot one of late, rolls over, that then would be a negative for the stock market. Crude, being weak as it is a negative. So now then we look for the other supportive items, and that has been the yield curve, which in the last few weeks has been supportive. You know, you had a tremendous crack in the markets beginning the middle of December when the blockchain and Bitcoin stories became excessive and got hit hard. So our question now is, and so we wrote it in December, was that a possible peak for the Bitcoin stuff was likely in December, January. Came in December, and then when it came in, the question was, would it lead a peak in the senior stock indexes? Well, they did, because they peaked in January. So here we are now. There was a virtual slaughter in the Bitcoin game, and then a pretty robust bounce and recovery out of there. And so the question is, will it roll over? I think so. This is not to criticize what's going on in blockchain and Bitcoin. The technological advance will continue. It's just that the speculation got overdone, and I think there's more correction to be done there. And then, as we noted in December, when the highest flyers get corrected, the senior stock indexes get corrected sometime after that. So this in the last week, the changes, you were losing support, the positives from industrial commodities, and the best from support from credit spreads and the yield curve had been in the market. So the stock market was ready for another correction. It's hard to say whether it's a leg down or not, but what we're aware of is that if you're in a speculative year in the first part of the year where there is speculation, and there has been, that after mid-year you can get the change in the yield curve and credit spreads towards, let's call it, adversity. And I think this is really behind the old saying about so many things like gold or the stock markets is sell in May and go away. I think that seasonal high relates to the seasonal change in the credit market. So anyways, if you're a fund manager, and from here to mid-year is not that much time to try and get a little more liquidity into your portfolio, and for individuals as well, you can't get the top trade. But the important thing is to take some money off the table, because the stock market is very high priced, and it's also had some of the most sensational readings on sentiment, like percent bulls and dynamics, like momentum readings in decades. It's an exceptional bull market that has now had its first correction, and there will be some rebounds, but the probability is, Jim, is that in the last half of the year, some unpleasantness out there may be discovered, because if you get even just the amount of change we've had in spreads in the curve recently, is there bound to be some people offside on that and not yet announced. So underneath the very favorable headlines, there's probably some troubles being happening, and then when the credit markets get into a bigger change, then you can no longer hide those things, and they start to come out. So probably choppy stock markets through for the next number of months, but then the probability of after mid-year is that the overall stock markets can be heading down. We're pleased with our work that we've been doing, because we remember back to early October when things were slightly depressed. We concluded that the whole world was going to get bubbled, and that even the Dow Jones index would get bubbled, and indeed it has. And that then we also put out in early October that often big speculative moves could end in the December-January window, and they did. Like we used, for example, gold in 1980. That peaked January 20th. The Nikkei speculation ended in the last trading day of 89. So there are examples of really good speculative markets completing at the turn of the year, and this is definitely the case with the .com or with the blockchain and Bitcoin game. So,
Bob, if we're going to see a downturn in the equity markets, is it going to be a couple of big dramatic drops, or is this going to go down a step, go up half a step, go down a step, go back up half a step, so gently step down?
Gosh, when you look at big speculator, like we were comparing the Bitcoin stuff to gold in 1980, for example, and they get very, very steep on the way up, but the hits are steeper straight down than they are even on the rush going up, which this has been the case with Bitcoin. I mean, they just real fast. And that was the case with the high-tech favorite stock in the 1873 bubble. The big tech stock was Western Union Telegraph. And then in the fall, when things turned nasty in the market, if I recall rightly, that stock gave up 40% in a week and a half. I mean, that was a slaughter. So when we've had things worse than that. So, Jim, when the degree of speculation on the way up suggests that when it breaks, the declines will be sharp and hard, and a number of them. So, they don't go straight down forever. But you would have oversolds, then rally or pause for a few months, and then another one, because post-bubble contractions, that's the best description for it. You've had a huge expansion of credit with the boom. Everybody is enthused about borrowing money. And then with the contraction, it changes, and people are realizing that debt burdens are just awful. And it's sort of like, get me out. I mean, just, get me out of this thing that's so painful. So it takes a long time to really get the awesome debt burden off your books, and there'd be a few business cycles with it, the 3 to 4 year stuff, recessions and expansions. And so this is what has happened in the past. Post-bubble contractions can last for decades, but the near-term business cycle comes and goes. It's just that any of the business expansions are not all that strong, and any of the recessions are pretty persistent. So, but then this is what we're heading for, and the swings up and down, both in industrial commodities, stock markets, and in the credit markets, well, we monitor them very closely, and we'll be watching it for you and our listeners there, Jim.
Bob, thank you so much for being on This Week in Money.
Pleased to be with you.
My guest has been market historian Bob Hoye. He's the chief investment strategist for Institutional Advisors. Coming up, Inc. Research CEO Ted Dixon on the BC and federal budgets. Next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Ted Dixon. He's the CEO of Inc. Research. He invented the mid-cap-oriented Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 Fund Data Fund Grade A+ award winner. Welcome back to the show, Ted.
Well, it's great to be back, Jim.
Taking a look at both the Canadian and BC budgets, did you see anything in the federal budget that caught your eye?
I think what was most notable in the federal budget was what wasn't in it, and we didn't get any major new taxes, so that's good. There wasn't an increase in the deficit projections. I think they kind of reduced the outlook in terms of what the deficit would be. So it was pretty much a stay-the-course budget, and not a lot of surprises. I think, if they're going to surprise with goodies or or anything with some good news, it'll be in the next budget, which it'll be closer to the election. And it'll also be a year after the U.S. Has been experimenting with their tax cuts and deficit finance tax cuts, which, we'll see how that all works out. So it was probably a politically sensible way for the government to go, and not a lot of surprises.
Plus, we don't know how the NAFTA negotiations are going to go.
Well, that's the other big one as well. So it was a stay the course budget. Now, the other I think one nugget in there that reading between the lines again kind of falls into the category of what wasn't in. We didn't get any discussion about guaranteed annual income, which is kind of all the buzz amongst a number of economists, especially on the left. They want to basically guarantee people in society a basic wage, which all sounds great, except it has impacts on who's going to pay for it and how that impacts the labor market. The federal government didn't go there. Instead, what they did was they're boosting the benefit of workers who are low income, who go into the workforce. They're going to get a little bit more money. It's not a lot, but you go into the workforce, you're a low income person, and you're going to get a few extra bucks in your pocket in terms of a tax credit. So I was encouraged by that. It shows that the government is thinking about ways of getting more people into the workforce, and in order to grow our economy, that's the type of move we need. So I'll give them a nod on that. Of course, there are other things in the budget which that we could have done without, but including more taxes, a few more taxes on small business. They managed to sneak in a smaller an increase in that, but a lot smaller than what they were talking about last summer. So from that perspective, it's a small positive.
The BC budget concentrated on housing, a number of measures. Is it going to do anything to make housing more affordable?
Well, the BC budget was where the action was in terms of the budgets this last few weeks. That was a major budget. I mean, I've seen a lot of budgets, and boy, that's right up there with big stuff. And it's going to have an impact on housing. I also think it's going to have an impact, a bigger impact on the Canadian dollar than the federal budget. And by that, I think it's going to lower some demand for foreign speculators to come into Vancouver, which will lower the demand for Canadian dollars. So, it's not going to be a huge impact on the loonie, but I think, on the margin, it's going to put a little downward pressure on the loonie. And, that's something that probably will play out over a number of months. Certainly the loonie won't be getting the lift it has been from money coming offshore into the Vancouver real estate market or, other markets. Now, this speculators tax that they've brought in and the increase in the property transfer tax for foreign buyers, it will move some of that foreign money into other markets, such as Montreal, probably, but we'll have to wait and see to what extent.
Now, when I talked to Alan Mark Angel, top real estate agent in West Vancouver, he said the focus of a lot of the BC budget was attacking high-end housing, but he says attacking high-end housing won't help the average person buy a house because it's not going to decrease the price of the low-end real estate.
Well, if they pull it off, it will certainly help the top line of the BC government's revenue. It could bring in a lot of money. So he's right. It will, though, have a domino effect, I think, to some extent, in that if single-family homes become slightly more affordable, then that will be one less force pushing buyers, down sort of the market, the food chain, if you want to call it that, into cheaper housing. So it'll have a small positive domino effect, perhaps, but it will be on the margin again. What will probably have a bigger impact is, in my view, is the elimination of the home owner mortgage equity program. I think that's what they called it, where you could get basically an interest-free loan. And I think that was helping to juice the condo market. That program will be gone. I think that will take some of the steam out of the condo market.
Well, basically, it boosted prices by $35,000 because they knew you could get an interest-free loan for that.
Exactly. And I also believe speculators saw that coming as well, thinking, well, great, we're going to have more end buyers. We can buy pre-sale, try and flip it, and there'll be someone to take it off our hands. And, we saw some pre-sale numbers almost double in some cases. It was absolutely remarkable what happened, between the time that program was implemented and the day it's going to end here. I believe it's at the end of March. So that could have an impact in terms of bringing prices, I don't want to say down, but certainly cooling them off in the condo area.
Going back to the federal budget, former BC Finance Minister Carol Taylor said if Prime Minister Trudeau wanted a pro-woman budget, what he should have done was provided more money for child care because they want to get women into the workforce, but you have that tough decision. Do you stay home and look after the kids or go to work, spend a fortune on daycare, and basically don't make any money by going back to work?
So the federal government, I think, is targeting daycare over the long haul. One of the other missing things from the budget was deliverables in terms of those programs and infrastructure. So they were elected on a platform of delivering infrastructure, and I believe that included things like child care facilities. We call that social infrastructure. A lot of that has been pushed off into future years. So I think the federal government is having a hard time actually executing on its ambitions. So we've actually seen a lot of these programs delayed, and I think a lot of it is logistics. For childcare, you've got to coordinate with the provinces. You've got to actually build the spaces. It's not easy to open up a licensed childcare facility anywhere in the country. You got to meet requirements. You've got to find the space. It's got to be affordable. It's not easy just to flick on a switch and say we're going to have more childcare if you want to do it right.
Should businesses be given incentives to put childcare right where the parents are? Because they've done studies. When the kids are close at hand, there's less stress in the workplace because you know where your kids are and that they're being well looked after.
Well, I think businesses, certainly larger ones, can do that without government help. So maybe we'll see more of that. Whether, you need to have the government involved in something like that, again, it's a logistical problem. Like for a small business, for example, if you're running a, even a sort of a 50 employee shop, to say, well, we're going to add a child care facility into our business, it's a big commitment and a big capital outlay. I think it's great in theory, but I don't see it practically, being something the government can really get involved with.
What would you like to have seen in the federal budget?
Well, I would like to have seen tax reductions, in terms of the personal side. However, I can understand why they're waiting to see how the U.S. experience plays out. yes, we've lost a relative competitive advantage on some of the tax rates. However, U.S. interest rates are going up quite a bit in order to finance these tax cuts. So you kind of have the government giving with one hand, but the bond market taking away from the other. We have to see how this plays out. But in general, the other area I would like to see is, and it's something they could do without costing the Treasury anything, is focus on deregulation and more freer trade amongst provinces. I mean, there's plenty of room to streamline red tape in the feds and the provinces. You know, it'd be nice to see the federal government take some leadership on that. I don't think they've demonstrated a real zeal for that. They've got zeal in other areas, which is fine. Maybe that's an area the opposition will focus on. However, I just haven't seen that kind of debate in Ottawa that we really need to focus on deregulation. And what they're doing in the United States, they're moving in that direction. That might put the pressure on Ottawa to consider that. So maybe deregulation will be an issue in the next federal election. I certainly would hope so.
What about British Columbia? What could have they done better?
Well, what they could have done better is take some of that money they're going to get from the property transfer tax and the new property speculation taxes and cut personal income tax. I mean, this is a budget full of taxes, and they don't need that much. I mean, they're overspending and they're overtaxing. And look, some of the things they're doing, I agree with. I think they had to take some measures on housing, and I like some of the steps they've taken to ensure that people who don't pay taxes here contribute to the economy via higher property taxes. If you don't pay income taxes, they're going to try and get you on the property tax side. I don't have a problem with that. However, it would have been nice if they had taken that, at least some of that money, and reduced the personal income taxes of those of us who are in the workforce every day.
Yes, years ago I asked Premier Ujjal Dosanjh why BC didn't up the personal exemption to $25,000 like Alberta has, and he said that would cost BC $3 billion. And I pointed out, sir, so in other words, you're saying you're financing the government on the backs of the working poor. He walked away.
Well, that's right. And even more so nowadays, you want to encourage people to stay in the workforce. You want to have our graduates from BC universities and technical schools and technical colleges to stay in British Columbia. So yes, they've made some good moves on housing to try and make that more affordable, but if your paycheck continues to shrink because the government's taking more and more of it, and let's not kid ourselves, this employer health payroll tax is going to hit people in the pocketbook. I mean, it's a bit of a trick the government's trying to pull here. Oh, well, the employer is going to pay. Well, guess what the employer is going to do? They're either going to, they might eat part of it, but they might also go to the employee and say, I'm sorry, we can't give you a raise next year because we have to pay this tax, or they may lay off people. So it wasn't a very helpful move, bringing in that employer's tax. Wrong direction, discouraging hiring. They have enough revenue measures in that budget. They really didn't need to do that.
Was that an unexpected blow for business?
I think so, absolutely. Especially that they're double dipping. That over a 1 year period, they're going to collect the MSP premiums, which a lot of employers pay for, and they're going to bring in the tax. So, yes, it was a blow. Now, a few businesses will actually be better off, but smaller businesses. But that's a one-off situation here and there. In general, though, it's just a tax that's going to discourage growth. It's going to discourage jobs. It's going to discourage people from staying in the workforce, Jim. If your paycheck goes down, you may retire a few years earlier. You may just say it's not worth it, the risk, the grind. You want to tax things that you want less of, such as housing speculation. That's fine. But you don't want to tax people going to work and creating jobs. You want more of that, not less of that.
Ted, thank you so much for being on This Week in Money.
Well, thanks for having me.
I've been speaking with Ted Dixon, the CEO of Inc. Research. His website, CanadianInsider.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Tim Wood, Bob Hoye, and Ted Dixon. And thank you for listening. Plus, a reminder at the end of the show, we'll have company showcase updates. from American Manganese President Larry Reaugh and Aben Resources CEO Jim Pettit. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, President and CEO of American Manganese. Welcome back to the show, Larry.
Well, thanks, Jim. It's always good to be on the show.
What's the latest from American Manganese?
Well, we put out a press release yesterday that we've contracted with Chemetco to do the second phase of research, which includes the development of 3 new patentable IPs and a pilot plant. And the program's going to last anywhere from 12 to 15 months. And we're well financed for that. So that's a big stepping stone for the company once you get the pilot plant, show that it can work on a continuous basis. And what does a pilot plant really mean? Well, the pilot plant is really the area where if you have any blockage in your system, if you have any weakness in your system, you pick it up in the pilot plant stage, so you're not shutting down production in the commercial stage to fix problems that are going to be very costly. So the pilot plant's a necessary part of our program. It's certainly necessary in the mining that we've done before. We've done many pilot plants, and we've worked out any kind of a potential area where there might be weaknesses in the actual design. So that, is actually a very progressive move for us. Once the pilot plant's done, moves us into a different category where just about all the risk is taken out of the project. Now, we know we can get 100% of all the metals, but we just want to show that we can do it on a continuous basis, where there's no interruption, and that it'll flow just like any other processing plant on a steady basis, 24/7. So Chemetco is beginning the work on that. They've developed a program. They've assigned the various scientists to various parts of it, and we are anxiously looking forward to getting that on the road. As I know that they're working on it now, and we'll have progress reports coming out over the next year. So that's a good thing. I was hoping that we would close the financing. We've got the application in, so I expect that to close in the next little while. But it was successful, and that's all I can really say about that at this time. But the biggest thing right now that's out there on the radar is the general markets. You're looking at weakness in the Dow. It's certainly tariffs that are being proposed by the government in the U.S. by Trump are affecting the markets in a negative way and affecting some of their partners in a negative way. But this is nothing new. I mean, the U.S. has been putting up tariffs. We used to have a tariff on manganese back when we were working on it, where there was actually I think a 15 or 20% tariff on any imports of electrolytic manganese metal or dioxide. And, that was, the world worked around that. So I don't see that as a big thing. But what about the U.S. market? Well, it's still in a correctional stage. It started here about a month ago. And, I don't see anything serious coming out of it. We can see some down spikes. We can see some stocks weakening. But, anybody that's got a real good project shouldn't suffer that long for it. That takes me on to one of my favorite subjects, which I used to write a newsletter on, called the fundamentals of the metal commodity market. And, you know, the fundamentals are still not really out there, but we're seeing things like we're seeing copper going down, nickel going down. Certainly gold has been going down, and it's like everything's stopped. And I don't see that being as a sustainable situation, because in reality, there's going to be shortages of everything. There's no new copper mines coming on, certainly no new cobalt mines coming on. There are going to be lithium mines coming on, but that all takes time. And I think some of the, some of the actual perceptions out there that lithium is going to be cut in half here by 2020 in price. I don't see that happening. I think the demand is just going to keep going, and we're going to see electric vehicles that are going to be coming off the assembly line in the millions. And of course, the rest of the world, where we use lithium and cobalt for handheld devices and cell phones and those types of storage batteries, you name it, they're only going to grow too. I mean, the world is changed. We're into an electronic world. We're into a world where we're substituting the old power sources to new battery power sources, and that's not going to change. That's just going to put more pressure on these metals. So there's going to be a lot of money spent in that regard, in exploration, and developing processes, and eventually putting mines into production. So I think that we're in a good spot. And that's just my take on it. We were it was pretty accurate in our fundamentals of the commodity market, which we published for a little over 3 years. And when the fundamentals left, which is when the financials took over the pricing of commodities, you've seen it in gold, you see it in copper, and certainly it affects everything. It affects the long-term planning. It affects everything when you're trying to put a mine into production. But we're trying to put a different type of a mine into production. We're going to be mining batteries. The one thing we don't have to do is go out and drill for resources. We know how much cobalt, how much manganese, how much lithium is in each battery. So that's a resource that you can calculate with a computer. You don't have to put drills on the ground or feet on the ground. And so we're looking at a huge opportunity for the company. We can get a commercial plant going. We've got interest in people that may want to be involved in putting the commercial plant together. We'll see how that develops. I certainly don't count on anything like that. We count on the company's management here to make sure that this project rolls ahead. When I think about what the cost is going to be for a small commercial plant compared to what like our moly project, which was $750 million, our manganese project was $500 million, and we did raise tens of millions in the manganese, and we raised hundreds of millions in the molybdenum. So we have experience in that, and I think that we're looking at the way the company's going to go on developing their progress. We're certainly looking at licensing as probably the biggest motivator out there. And for example, if you're a battery manufacturer and you want to, and you have the responsibility from the EV cars that you sell the batteries to do something with the product on recycling, you may want to, I think it only make real good sense to have a small commercial plant licensed for your operation. And that would be cash to the company and some kind of a royalty. But that's the way we're looking at moving ahead on that. So this is just a general mishmash of things that we are thinking about in here, which represents maybe about 10% of what we think about in here. And but you have to watch all these things to make sure that you're in the now when it comes to moving a project ahead. So I guess the thing is that we would just like to say, hey, we're on the move again. There's going to be a steady news flow coming out, and we've got super interest out there. So let's just watch for the press releases and the progress reports as we move this project through the chute. That said and done, I wish everybody a great weekend. It's a little wet out here again, but that's better than snow. And that's probably all I have to say at this point, Jim, unless you have any questions.
Larry, where is American Manganese traded, under what symbols, and how can they contact you?
American Manganese is traded on the TSX Venture Exchange under the symbol AMY. It's traded under the U.S. under the symbol AMYZF, and it's traded in Frankfurt under the symbol 2AM. And we have a website out there where we have a lot of information that people can go to, AmericanManganeseInc.com. If they want to have direct contact, they can email me at lreaugh, LREAUGH, at AMYMN.com, or give us a call here at 778-574-4444.
Larry, thank you so much for the update.
Thank you.
I've been speaking with Larry Reaugh, President and CEO of American Manganese. I'm Jim Goddard. Our conversation took place on March 2nd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thanks, Jim. Good to be here.
You're speaking to us from Mexico, but you have news about Saskatchewan to tell us.
That's right. We just put a news release out about our plans. We should be drilling in the next week or so. The other good news is that in that particular area, just to the north of us, Silver Standard, which is now called SSR Mining, are about to start a 10,000-meter drill program. And this program is basically from our northern border up to the old Claude Resources mine that has the CB and the Santoy deposits. Silver Standard, SSR Mining have bought the old mine for, it's a high-grade mine too, for $337 million, and they're going to do an extensive exploration program to increase the size of their deposits and look for more. They think there's a lot of exploration upside, and I had heard in Saskatoon at a technical conference, they had said that they're finding a lot more interest below that 200-meter level, which incidentally none of the historic holes on the Chico property have ever really been. The deepest hole is 110 meters. So I think what's going to happen is the interest in the area is going to pick up. We happen to be there already. Silver Standard's picked up all the ground between them and us, and they're going to do 10,000 meters roughly there, and another 10,000 meters roughly up around the CB and Santoy deposits. So it's really good news.
On top of that, what other projects are you going to be doing, or are you going back to some old ones?
Well, firstly, let me just talk a little bit about the Chico. It's, we do have some historic drill results there, and they're quite impressive. You've got 9.5 grams over a couple of meters, and some, and this is going quite a ways back, and 14.5 grams over half-meter intersections. A lot of surface sampling with some high-grade samples, It's an interesting area. These are cross-cutting splays that come off the big Tabinor fault that runs from basically Rabbit Lake down to into the Dakotas by the Homestake mine. And it's these cross-cutting features that basically what you're looking at the Quad Resource area, CV and Santoy. We've got 3 of them on our property, and that's where the interest from the past has been. Now, what we've done this year is we've added to the mix of really good drilling and really good sampling an IP survey. And that survey basically has uncovered for us a very, very large high chargeability zone centered right below the shear zones that we're interested in. And like I said, none of the old holes were below 110 meters, and this chargeability comes up to about 150 meters, and it's very pronounced, very noticeable. I would encourage people to go to the website and look at the 3D imaging of it. And you get one of those profiles, you can see the old drill holes coming to surface, not getting to that depth. So we think we've got something that is coincidental with the shear zones and the geochem that's been done on surface and the drilling. We think we've got a really good opportunity here just to drill some deeper holes and see what we come up with. As far as the other projects, we're very interested in what's going on in Justin right now. We've seen Golden Predator's recent news release with their, the Sprague properties right at joining us. That's opening up a whole new it's a whole new interest in the area. We've got plans. We've had plans on the table for a long time, waiting for the right time to spend money up there. We're looking at going back up there this year and pursuing what we uncovered last season up there. We just spent $100,000 in trenching, and we came up with some tremendous numbers. Gold grain counts. We're on a 30-kilogram sample. We're pretty spectacular. We get 1,300 gold grains in that sample, of which over 1,100 were pristine, meaning they hadn't moved. We're probably sitting almost right on top of a structure that we could go back up there this year and trench and do some more work. So I think that's what we're going to do there. And then, of course, we're going to get back into the Golden Triangle later in the year. July, more than likely, is what it's looking like. And a little earlier than last year, because our permitting's all in place now. We won't have to wait for permits. And we'll be ready to go by then. So we've got the Chico going on pretty quick. We'll be starting at least by the 9th, I think. They're mobilizing stuff up there now. We'll have a look at probably as early as we can, maybe into May, June. Look at a little bit of work up in the Justin property in the Yukon. And then we'll be back at the Golden Triangle, our Forest Curve project. And I think that'll be a much bigger, probably double the size from last year. We've got an area there we need to follow up, so that's going to generate a lot of excitement because we did hit something. We've got a zone there that we need to work on and expand. So, it's going to be a busy year for us, very busy year. And we've been, flatlining for a while, and I think things are about to change for the company as far as the stock goes.
Jim, where is your company listed, under what symbols, and how can they find out more information about Aben Resources?
Well, we are a gold exploration company. All 3 projects are gold, and we're listed on the TSX Venture under the symbol ABN, and down on the pink sheets in the States, ABN.V, as well as Frankfurt. And the website's new. I would encourage anybody to go take a look at the website. It's quite new now. It looks great. Got a lot of information.
And the website address?
The website address is AbenResources.com.
Jim, thanks for the update.
You bet. Thank you.
I've been speaking with Jim Pettit, CEO and President of Aben Resources, on March 2nd. I'm Jim Goddard. He was speaking to us from Mexico.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.